Hello, everyone. Thanks for joining us this Saturday morning, and welcome to the Specialist Trading Educational Presentation. Now, today I'd like to talk to you about boosting your consistency, and I'm going to give you actually rules to one of these two methods. Now, let's take a look at this chart here. Here's an older chart in Apple coming up to just actually about the first week of February. Now, the reason why we stress consistency so much is because, believe it or not, traders who have been trading Apple have been losing money. Not all of them, but there are some that have been contacting us and saying, Steve, how do I make money in this market? It just goes straight up. Well, most likely, if you've been losing money trading Apple, you're basically selling into it. You're not going with the flow. That's really half the battle when it, in terms of consistency. You have to really want what the market you're trading wants. If it wants to go up, then you're a buyer. If it wants to go down, then you're a seller. The only trouble is we've usually been trained the opposite way, right? We're always trained that, well, there's resistance here, so you've got to sell, or it's oversold, so you've got to buy. So we're always doing the opposite thing of what it takes to really be consistent. Well, I'm going to share with you these two methods that actually generated signals. In fact, one of the methods I'm sharing with you today that I'll actually give you two of the rules to would have generated signals right here to go long, which generated a nearly 78-point gain if you potentially stayed in the entire time. If you missed that setup, it generated another signal here, and still another one here, and there as well. Now, a lot of traders are always saying, well, Steve, how do I become consistent? I mean, I don't know how to actually do this. How do you train me? Are you actually there with me? How is this done? Well, that's the main reason why I teamed up with Pro Trader Strategies. We developed the PTS Primo Charting Platform. This is an educational portal that actually teaches you how to be consistent with a simple process that we've formatted within the platform. And I'll share with you what that process is. So once again, thanks for joining me today. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my webinars, we only have one goal. First of all, that goal is not to tell you what to buy or sell on Monday. That goal is not to tell you what the perfect market is. And that goal is not to tell you what time frame you should be trading. That really, in my opinion, is a recipe for disaster. Our only goal is simply to educate you so that ultimately you'll make your own trading decisions. Now, this, in my opinion, is the only way one will become a consistent trader. Think of it. Our entire industry is based on you either going to a blog, going to a chat room or a trading room, or watching someone on TV, or taking some master course where they tell you what the institutions or what the big traders are doing, and then you base your trades based off someone or something else, right? Now, if that works so well, because remember, the entire industry is based on that format, if that works so well, then why do 85% of all traders fail? It's really because that doesn't work. I was struggling some 43 years ago when I first started trading. I was even on the floor of the Pacific Stock Exchange. I was a market maker and a specialist down there on the floor. And I had been taught the exact same things, and they weren't working for me. I was lucky enough to have some mentors who taught me the same things that I teach my students around the world in over 115 countries and in every state. And this is the specialist edge. So this is what has sustained me, and this is why we teach our students around the world the same thing. Now, I'm going to share with you a lot of information today, but before we begin, as always, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these two methods, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Now, as I stated in the opening, we're an educational company, and one of the ways in which we educate you is by posting things on our Twitter page. So feel free to follow us on Twitter. There's a lot of great free educational information, anywhere from little bits of financial wisdom to signals our strategies have generated. Lots of great free information. Follow us on Twitter. So remember, once again, if you've come here thinking that I'm going to tell you what to buy for Monday or what I think the market's doing, my personal opinion, what I think you should be trading, or what I think the perfect stock or market time frame you should be trading, you've come to the wrong place. In fact, that goes entirely against our philosophy or our concept of trading. We're simply educators. And our goal, once again, is to teach you how to trade with a specialist edge. Remember, a good mentor does not trade for you. A good mentor does not furnish you with trade signals. A good mentor does not tell you how to buy or sell on a particular stock on Monday. A good mentor teaches you those things so that you can ultimately do them for yourselves. And that's the purpose, and that's the information that we provide for all of our students. Now, since this is going to be a class, I want you to ask me as many questions as you'd like, but please wait till the end of today's class to ask questions. I promise I'll get to each and every one of them, but so that we don't have to wait around for every question to be answered on every slide, let's hold off till the end. The only question I will answer is this, and that's the most common, and that is this being recorded? Yes, it is. So if you have to leave early, or if you're having technical issues, don't worry. I will provide each and every one of you with a link to this recording, okay? All right, with that stated, let's start out today's presentation. Let's begin, and we're going to be talking about these two methods. Let's start off with the first one, strategy number 4. This is the actual first strategy I was taught by my mentors some 4 decades ago, and I continue to use it in my own personal trading on a daily basis. That's how consistent this method is. It produces a lot of signals too, and it's probably our most popular method traded around the world. Once again, we have students trading this in virtually every state in the United States and over 115 countries. It's our most popular as well as consistent method. Some of the highlights of this particular strategy are it's designed for traders looking to catch momentum. And the beauty of this is that oftentimes when it appears as if whatever market you're trading, whatever time frame, is kind of going sideways or selling off or not doing something, that's when a signal will be generated. When it appears that there's no momentum within the trade, or the momentum is going the opposite of what you want the market to do, that's when it'll generate a signal oftentimes. Now it does this by using a unique pattern that is generated all the time. I mean, you just see it over and over again. Once you learn what to look for, you see this pattern reoccur over and over in any market, in any time frame, and in any direction. That's why strategy 4 is so popular, because it can be used for any market. Let's say you trade currency pairs along with stocks. Well, you can use the same strategy for both markets. Let's say you like to trade one market on a 10-minute time frame and another one on a weekly time frame. Well, that's fine. It can be used in any time frame as well. Now, it's extremely simple. It only has about 4 rules. One of the rules is applied with the one indicator it uses. That's how simple it is. It only uses one indicator because basically we're looking for this pattern. And what is that indicator? Well, I'm going to share it with you right now, as well as another rule, okay? So you're basically getting half of the rules to strategy number 4 today. I'm sorry, I can't divulge all the rules. I know a lot of you will say, well, Steve, what's this pattern? What do we look for? That's the basis of the strategy, and I can't divulge that. It wouldn't be fair to all the students around the world who have purchased strategy 4. But I will share 2 of these rules with you today. And remember, we're going to be looking for these setups by the process that we've developed on our platform. This is the educational platform that actually generates strategy number 4 setups through a simple process. So let me share with you what that is. As we look at this chart here in VLO, all right, let's talk about how most traders would discern what to do with this particular chart right here. They'd say, well, looks like we're basically in a sideways trend, and that course I took that follows the institutions, that's telling me that there's major resistance here. So if we get back up to this level, I want to sell. Or in fact, I see we have a bearish engulfing pattern right here. Since there's a resistance, I might as well just sell now because this is negative, okay? Once again, this is the way most traders trade, and this is why 85% of all traders fail. You're basing your decision off of someone or something else, like the institutions. And I was trading with the institutions 40 years ago when I was on the floor. They used to give me their orders. And they had no higher level of consistency than anyone else. So I don't know why anyone in the world would base their trades based off of institutions. So if someone was saying, okay, Steve, if I'm not going to do that, then how do I find out what to do? Well, the first thing you do in our process is to find out what the overall trend is. Now, I know you may think, well, the overall trend is sideways. It's not doing anything. But that's not really true. How do we find out the overall trend? Well, we go to our upper green strategy tab. Here's where we have all our strategies and methods. And go to the far left. That's where we start, the far left-hand corner with our buy-sell line. This will tell us if we're going to be a buyer or a seller. So we click that on, and rule number 1 is the buy signals can only be entered above the 50-period moving average. Now, our buy-sell line is the 50-period moving average, but we have 4 different and distinct ways of viewing it. Let's just click on the upper green strategy tab, and we'll click on the 50-period moving average format. And as we can see, price is above the 50. So what is the market telling us? it's telling us that the overall trend is up. If price is above the 50, the overall trend is up. So I don't care what some institution is doing. I don't care what some guy in a blog is saying or some earnings report is telling you. If price is above, we will only look for buying opportunities, okay? So the overall trend is up. If the overall trend is up, then we're going to go with the overall trend. We're not going to swim upstream. We're going to go with the overall trend, so that means we're a buyer. All right, so that's just the first part of the format. Let's go to the second part. Rule number 2, in order to look for buy signals, we want to look for that pattern, okay? Once we find that pattern, if a buy signal is generated, that bar must close in the top 25% of its range. So as we see here, we're above the 50, and we see these bars are closing in the top 25% of their range. And now in our course, we teach you the pattern to look for, we teach you what to view, and we also teach you to look for these bars that close in the top 25%. Now let's say you've become a member of our course, you've studied and you've researched, you understand what that pattern is, and you say to yourself, you know what, these are all valid strategy for buy signals. So in order to check your work, part of the process is now you go up to the upper green strategy tab again, find strategy number 4, because that's the strategy we're trading. Click that on because the market wants to go higher on the short term. So what we want to do is make sure that these are valid signals. Click on strategy number 4. In the drop-down menu, click on the educational signal arrows to check your work. And guess what? You're in sync. Those are all valid signals. So once again, if we are above the 50, the overall trend is up. If we close in the top 25% of our range, that's the market telling us that it wants to go higher on the short term. So now you have the short term and the overall trend in sync. You see, this automatically eliminates using a method that so many traders have been taught that, in my opinion, shows no signs of consistency at all. And that's looking at a higher time frame to find out the trend of the lower time frame, making sure the two are in sync. So in other words, you would have made sure that if you were trading with that technique, that the weekly time frame was in sync with this daily time frame. Well, I tried using that technique 40 years ago, and it didn't work for me then. So there's no reason to use it now if you don't want to. If you want to make sure that the overall or the higher time frame is in sync with the lower or short term, just use the 50-period moving average for the overall trend and look where bars close in the top 25% for the short term. Once you combine the other 2 rules left in strategy number 4, you will find these valid buy signals, and look what eventually happened. The stock gained 17 points in the next 3 weeks, so you potentially could have gained 17 points. Just see how strategy 4 identified that momentum before it even happened. Now, this can work to the downside as well. Once again, let's talk about how most traders would view this chart. Once again, they'd say, well, Steve, I follow Fibonacci, and this is a major Fibonacci support line, okay? I also follow Elliott Wave, and this is where you want to buy. And once again, there's a lot of valid stopping here, meaning there's a lot of buying, and once again, a bullish engulfing pattern. So I'm sorry, Steve, I'm going to have to be a buyer because, Fibonacci and Elliott Wave, that's listening to the market, right? Well, once again, support and resistance, one trader's support is another trader's resistance. They're just too subjective. You can see the same chart, have 2 traders look at the same chart, and they come up with entirely different levels of support and resistance. We want things that are more cut and dry, something that every trader will look at and come up with the same analysis. And what's that analysis? Well, let's go to rule number 1. Sell signals can only be entered below the 50-period moving average. So we have to apply the 50-period moving average once again to see where we are. Are we a buyer or a seller? We click on the 50-period moving average. And guess what? We're below the 50-period moving average. So what is that telling us? Not some institution, not some Elliott Wave or Fibonacci support and resistance line, but what is the market, the chart in front of you telling us? It's saying that the overall trend is down. So if the overall trend is down, do you want to be a buyer? Absolutely not. Unfortunately, that's what most traders do. That's why most traders wind up in that 85 percentile that loses money. So right now, you've just increased your odds for consistency because you're in sync with the overall trend. Now, let's find out what the short-term trend is so that we can be in sync with the short-term trend. Rule number 2 is if we get a sell signal, if all the rules are met with strategy number 4, that setup bar must close in the bottom 25% of its range. So we see that we have a total of 4 here that we've circled red. Now someone could say, but what about these bars, Steve? These close in the bottom 25%. But remember, there are still 2 more rules that need to be met, and they apparently weren't part of the structure of a strategy number 4 signal. But you think after your studies that these are. So in order to check your work, what you do is, knowing that the market wants to go lower on the short term, let's check and see if these are valid. Click on strategy number 4. Click on signal arrows for educational purposes. And guess what? You're right. This is how you learn how to make your own decisions. See, our job as an educator is to have you identify these on your own so that ultimately you can look at any chart, any time frame, any market, and you'll be able to properly identify a valid strategy number 4 buy or sell signal. You won't have to rely on looking at the news or waiting for the earnings to come out. You won't have to rely on some guy in a chat room or waiting to see what the institutions are doing. You'll know right off the bat. You won't have to rely on these arrows anymore either, because they're just there to educate you and to check your work. This is our goal as an educator, because as we stated, our philosophy is the only way you can become consistent is by making your own trading decisions, not on relying on someone else to. I don't provide any trading decisions for anyone. I give out my students my personal email address, and they'll say, well, Steve, do you think I should buy that? And I say, it's up to you. You know, you're the one who's making the decisions, not me. You know, if someone wanted to teach you how to swim because you wanted to be in a tournament, well, you get a swimming coach, but he wouldn't actually swim in the tournament for you. You would have to do that. He could teach you how to increase your length and your stroke and how to be faster, but he's not going to swim for you. It's the same way with trading. Why would you rely on someone to tell you what to buy or sell? I mean, that's like someone in the operating room, a brain surgeon, asking one of his nurses or assistants, how do I operate? Tell me what to do. You should be in charge of making your own trading decisions. Now, these are all valid strategy number 4 sell signals. We're below the 50 period. They all closed in the bottom 25% of their range, and they met the remaining rules of the strategy. If you want to see what happened after that, well, the stock fell 12 points in 3 weeks, okay? Once again, someone could say, well, wow, how does this happen? How did you guys know it was going to drop like that? We didn't know how far it will go. This is not a predictive tool. We don't say it'll go down 12 points and then get out. We just tell you high probability setups for entry. We give you 7 or so different ways to enter, 7 or so different ways to place your stop, and 7 or so different ways to exit. How you decide, remember, is up to you. So let's look at some more strategy number 4 signals that were recently generated. This is a chart in Facebook. As we can see, we're above the 50 period moving average. Look at all these buy signals that were generated in sync with the overall trend and the short-term trend. Now, I want you to pay particular attention to what happened here at the end of January, okay? A big gap down and it went lower. I'm going to share something with you later on in today's presentation where even taking this signal, you would have potentially not even lost any money. In fact, would have made money. We look at AEM, okay, we're below the 50 period moving average, so we're not going to buy anything. We don't care if someone is saying there's major support. Here was a sell signal. 1 day later, it dropped 10 points. Probably some news event or some fundamental information came out. Now, students always say, well, do you guys follow the earnings? How do you know that a lot of these are going to have big moves a day or two in advance? Because the market tells us. That's the only thing we listen to. Everything that was went into making this strategy number 4 signal was based on the chart in front of you. There's nothing else, in my opinion, you need to look at. Why overcomplicate your trading by looking at news events, earnings, moving averages, institutions, trading rooms, when you can really find everything you need right in front of you? Here's a chart in Apple. Remember we talked about that earlier. Well, how could we have taken advantage of these signals? Well, we're above the 50, and each one of these signals closed in the top 25%, and they all met the requirements of the pattern. As we look at CARG, cargo, we see that we had some sell signals here. Ultimately, the stock fell 12 points. And then lastly, the market has been soaring in Tesla. 735 points in the last 3 or 4 months. All right. So many traders say, gosh, I wish I would have known to go long that. Well, if you learn the things we teach you in our courses, you would have had multiple chances to go long with strategy number 4. In October, when the stock was half its price as it is now, even I think a third, you had 2 consecutive buy signals before any momentum happened. The stock was going sideways. And then when it looked as if it was topping out and we had a sell-off, buy signals were generated before the momentum kicked in. Potentially, you could have captured over 700 points, depending on where you wanted to exit. Okay, that was our first method. You see how it really gives you these high levels of consistency because it's based off of capturing momentum, and it can often signal that a momentum move is going to happen before it even happens. Now, what happens if you miss the momentum? What happens if, how many times we've seen it either intraday or trading a stock or a future or a currency pair where it goes straight up and you go, gosh, I wish I would have gotten into this, but I missed it, or I wasn't following it. Now it's really gone up too high. I can't get in. Here's where strategy 3A comes in. It's a perfect method for capturing those already existing trends. All right. Some of the highlights, once again, it's designed for traders looking to trade strong trending markets. So many traders will tell me, they'll say, Steve, I can't trade it now. It's already up too high. Or I can't sell it now. It's already gone down too much. It's oversold. Well, strategy 3A is based on looking for those markets that still have some room to move to the upside or the downside. So it's a trend continuation strategy, and it does this by using a unique proprietary Bollinger Band setting, which we teach you in the course, okay? Let's look. I can't give you some of the rules to this because I would basically be giving it away, but let's look at some of the recent examples of this. Here's one in DVA. Now, someone looking at this would say, well, gosh, we're already in a trend, Steve. I mean, this thing has already gone up. I can't buy it here. We're already moving upwards. But strategy 3A is designed to find out if there's still more room to the upside left in it for buying opportunities. It generated a buy signal here based on our rules and 15 more points to the upside. And even if you miss that signal, another one was generated one day before this large up move. Works to the downside as well. CVX had been going down sharply for a week or two. Someone would say, well, Steve, this is so oversold. All the indicators are tremendously oversold. I can't sell this now. Well, sometimes you're right. Sometimes it needs a little time to pull back or to jump up a little bit. But other times, the stock, through our rules, will tell you that there's still more room to the downside. That's where strategy 3A comes in. It generated a sell signal right here at the bottom, and you still could have potentially captured another 10 points to the downside. Here's an example in WEC in January. Stock had been going straight up for a couple of weeks. Most traders would say, Steve, this is too overbought. All the oscillators I follow, all of the chat rooms I go to say, you've got to look to sell this. It's too high right now. This is most likely where you most likely would have wanted to sell it if you had been long. But strategy 3A can tell if there's more room to the upside left in it. Generated a buy signal right here at the top of WEC, 10 more points to the upside. And then lastly, oftentimes, when you have a market that's going, topsy-turvy, straight up, then straight down, it will still be able to generate signals. As we see here, there was a straight up market right here at this point, and then later on, there's a strong down market here. Well, in the upside, it generated a buy signal that potentially could have captured 12 more points. And then when the strong downtrend appeared, it generated a sell signal right here where you could potentially captured 10 more points. So you see how it's entirely different from strategy number 4. Strategy number 4 will oftentimes generate a signal when it looks like nothing's happening or the market's going in the wrong direction of the signal. And then all of a sudden the momentum will kick in. Strategy 3A is designed to already have a strong trend in place right where you think it can't go up any higher or it can't go down any lower. And through its proprietary rules, it figures that there's still more room left either to the upside or to the downside. Two entirely different markets. Let's look at some other time frames and some other markets as well, because that's the beauty of these methods. They can be applied to any market, any time frame. All right, here's the QQQs, the ETF that represents the NASDAQ. Once again, in hindsight, since December of last year, it's been going straight up, right? Well, if we clicked on the same process, even though this is an ETF, the same process for strategy 4 and 3A, we click on the buy-sell line, click on 50 period, and we see that, well, we've known not to sell this. If you lost money trading the QQQs or being out of the market, that was your fault because the market's telling you it's above and the overall trend is up. Now, if you're trading strategy 4, you look for those bars that close in the top 25% and that meet all the requirements. And to check your work, click on strategy 4, signal arrows, and guess what? You're right. Those are all valid signals. And you see how all these signals of strategy 4 were generated when most of the time the market was going the wrong way. You see we had sold off and it said, nope, there's more momentum to the upside. Sold off, generated a buy signal, more momentum to the upside. Sold off, buy signal, more momentum to the upside. Now, if you miss those, or if you like to trade markets that are already confirmed going in the direction, click on strategy 3A, and once again, you would have had a buy signal after the trend had ensued, and another one after it ensued right here. Here's an example of a monthly chart in RRC. As we can see, the same concept applies even looking at a monthly chart. We're below the 50. All these are strategy number 4 sell signals with the small arrow. The large triangular arrow is the strategy number 3A signal. Looking at a 4-hour chart, the Australian dollar, here's a more advanced strategy 4. Even though we were below the 50, this closed above it in the top 25%, and the pattern requirement was met. So potentially you could have captured 130 pips to the upside. And then lastly, if you like to trade intraday, small time frames, okay, here's an hourly chart of the E-mini futures. Looking at this, someone could say, well, Steve, gosh, I would have loved to have gone short. How did I know? The same process. You apply the buy-sell line, 50-period moving average, you would have known right here not to be long the E-mini, okay? Now, you look for the same bars that close in the bottom 25%, check your work, and look at all the sell signals you could have taken advantage of. If you'd taken advantage of this one, that's 100 points you could have potentially captured, or $5,000 per contract that you potentially could have made. Okay, so let's recap before we go into question and answer, and I tell you about a great offer we have for all of you today. First method was strategy number 4. This is a method designed to capture momentum many times before you even see any momentum appear. If you're the type of trader that wants to sit and wait for some really nice setups, well, strategy number 4 is a great method for you. But what if you're the type of trader that says, you know what, I want a little confirmation. I want to see that it's going in the direction that I want to be trading in. Well, then strategy 3A is for you, all right? It doesn't wait to buy off a sell-off or to sell off of a bounce. What it does is says, you know what, if it's going higher, I'm going to use my tools to see if it's got some more room to the upside. Or if it's going lower, I'm going to use the requirements of the strategy to see if there's more room to go to the downside, all right? And then lastly, the PTS Primo charts makes teaching and learning these strategies easy because it's all developed in the platform. All the rules, the process for trading these methods is right there. So you can learn on your own, study the course materials, watch the videos, and then you can also say, well, I'll check my work through using the educational arrows. And then ultimately, we want to get you to the point where even without using the platform, looking at any chart, any time frame, any market, you'll be able to properly identify strategy number 4 and strategy number 3A signals on your own. So as we close here, and before you ask me questions, I want to ask you, do you think these 2 methods can help your trading in 2020? I honestly think your answer is going to be yes. So because of that, we have a great Saturday offer for you, just especially for the people that attended today. We're going to offer you strategy number 4. That's our instant course access to our most consistent strategy. And on top of that, you'll get all the rules, you'll get instant course access, and you'll learn all the different entries, all the different exits, and all the different stop placements. But we're also going to throw in strategy 3A. This is our premier continuation strategy. You'll once again get instant access. You'll get that unique Bollinger Band setting, and you'll get all the included entries, exits, and stops for you to decide how you want to enter, exit, and place your stop. Both of these methods can be applied to any market, any time frame, and any direction. But in order to learn this properly, we want you to get 7 more bonuses. And I'm going to tell you about one of these that is probably the best one. You see, all the prices and all these bonuses we're including for our Saturday special have all been slashed. You're going to get the add-ons if you like to trade with, say, TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader, or our platform. You're going to get the up and down arrows that automatically signal where the setups have been generated. Bonus number 2, you're going to get slashing on my Full Secrets of a Stock Exchange Specialist course. This is a 3-hour video seminar when I was the head speaker at a convention in Denver, Colorado some years ago. They recorded it. I gave a lot more information, a lot more different techniques and methods. It's a 3-hour video course. This price has been slashed. You're also going to get a PDF version of my book. This is where I go into detail on my time on the floor of the Pacific Stock Exchange, especially how I traded and made markets during the crash of 1987. Now, our Secrets 2.0 course is more advanced. It takes all these techniques and methods up a notch. It's for the more advanced trader, but we're also including that with our slash prices. Number 6 is our probably the most, I would say, the most powerful of our bonuses. It's 6 months of our PTS Primo Charting Platform with delayed data. You'll be able to go through this process and be able to actually learn with the platform, the educational tool, how to generate these signals. You'll also get bonus 6 strategy scanners on the PTS Primo charts to identify these setups. So if you want to scan for nightly 3As, or if you want to scan for strategy 4. And then lastly, you'll get into the multi-scanner. So you can scan for multiple strategies in multiple different formats, all to make up your own signals for the next day. These are all tremendously discounted. In fact, let's talk about bonus number 5, because this also comes with a lot of perks. You're not going to just get 6 months of the platform with strategy 3A and strategy 4. Here's what you're going to get. You're also going to get the 4 different features of our buy-sell line. Okay, that was the 50-period moving average. There's 4 different ways to view them. You'll also get our signal scanners, our strength of trend tool, a tool I developed with ProTrader Strategies that has a really unique ability that oftentimes can spot when a trend is running out of gas. In fact, it just spotted that in one of the major stocks that's been up tremendously in the last couple of weeks. And here's the thing I think that's really going to help you that you will find nowhere else. These are our proprietary exit levels. Let me show you how they work. All right, here's a signal in strategy number 4 in LPSN. Okay, it was a buy signal. All right, it was a little bit more advanced because the majority of the bars were below, but look where we closed. We closed above in the top 25%. And if you study the pattern, you'll see that the pattern requirements were met, so it was a valid signal. And you would have had a nice profit. But then look what happened. Let's say you had stayed in a little bit too long, because it's your decision how long you want to stay in, and then this happened, okay? Well, most likely your winning trade would have ultimately turned into a big loss. Here's what we have provided for you on the platform. We now have automatically generated exit levels. All you have to do is double click on the arrow where the signal has been generated, and you'll see these exit levels. You could have taken advantage of any of these 3 that were generated and gotten out well before the stock really changed direction. And remember I talked about Facebook, how all of these signals worked out really well, except for the last one. It went up for 1 day and then straight down, right? If you had double clicked on our platform, you would have seen that there was 1 signal generated to exit right here at 224. I believe the stock actually went up just about a half point higher than that. So that would have given you a chance, if you decided to take that, to actually exit with a profit prior to the stock really falling out of bed. Okay, you'll only find these on the PTS Primo Charting Platform, and you can apply that. These are just one of the ways you can exit. We have roughly 6 more different ways to exit using our platform, but this is just one of them that we've automated for you. That's included with your 6 months. Okay, so this is all included with personalized tech support. If for any reason you can't load up a chart or don't know how to get your signals generated, we will be there in a matter of moments to fix the issues, whatever you're having. Okay, so let's break this down. We're going to offer you strategy 4, strategy 3A, okay? All the 7 extra bonuses, which include 6 months free of the platform. You're going to get complete strategy rules, entries, exit, stops. Remember, you can apply to any market, any time frame, and educational correspondence. I didn't talk about that. You'll get my personal email where you can contact me whenever you like with a question. I've already answered a few emails this morning from students that emailed me last night. So normally, this Saturday discount with all these things included will cost you over $7,000. Not to worry, because you've taken time out of your Saturday to come listen to this educational presentation, we're going to slash that. In fact, we're only going to charge you a limited time only $297. This means you'll save over $6,800. You're going to get all this information, 2 strategies, plus 6 months use of the platform, plus a lot more methods and techniques on the platform for only $297. I can almost guarantee you that you probably have spent more than that in the last couple of weeks just in commission alone, okay? So this is a great, great offer. Ask yourself, you owe it to yourself to start out 2020 in the right direction. I can't think of a better way at such a small price to get this much information. It's taken me 40 years to accumulate all this. you'll get this right in front of you. You can start as early as today for less than $300, okay? Included with that, once again, you'll have educational correspondence with yours truly. You can contact me whenever you'd like. Okay, here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. They developed the courses and all of the discounts and all the tech support with the platform with me. You can email them at trading@protraderstrategies.com. I would, if you have questions concerning the platform or pricing, I would strongly suggest calling them at 310-598-6677. There's absolutely no obligation. They would be more than happy to answer any question concerning pricing and concerning tech support and things of that nature. Now, that link you see below that is the link that will take you to the information and the sign-up page. It's not a live link, but a live link was just posted on the chat box on the far right-hand corner of the GoToWebinar column. So that's a live link. You can click that one, and it will automatically open up a browser for you, okay? I'm going to leave this information up here while I answer any questions. I promised I would save the last portion to ask you any to answer, and you can ask me any questions. So I see one person had difficulty hearing this morning. And a lot of times that has to do with your own internet connection. But don't worry, everyone will get a link to this recording. Someone is saying, can this work intraday like on tick charts? Yes, it can. I have used Strategy 4 on tick charts. I still do. You can use it on range bars. You can use it on 1 and 2 minute bars. Same thing with strategy number 3A. Now, here's the thing. When you are using really small time frames, you know, a lot of times there's a lot of noise when the market isn't doing things. But when you get these really strong moving markets, the way we had yesterday to the downside, or we've had in the previous days where it goes straight up, these strategies work tremendously well intraday. Okay, take it from someone who trades them. Now remember, your results are based on how you trade it. We give you the information and to see where the signals have been generated, but how you decide to enter, how you decide to exit, and how you decide to place your stop is entirely up to you. And people will say, well, Steve, why don't you just tell me where to exit? Why don't you just tell me where to enter? Because once again, that goes against our philosophy. What if you, let's say, based your entries off of mine? Let's say I like to trade 50 times a day, all right? And you like to trade maybe once a week. Well, there's no way, even if the trades were profitable, there's no way you could keep up with that because it just goes against your nature. It goes against your style. So that's why we say everyone has to meet their own needs. Or let's say I only risked a very small portion of my capital. I was really risk averse and I didn't want to have any risk at all. And let's say you're the type of person that says, hey, you know what? I don't mind taking a lot of risk. I don't mind, I have a lot of money in my account. I can afford to take a lot of risk. Well, you wouldn't do well with a stop placement that gets stopped out a lot of the times with small risk and then makes it all back. You want to stay in the trade. So we offer you several different ways for stop placement if you're a real risk taker, or if you don't like to take risk at all. Same way with entries, the same way with exits. That's how you find a method that makes you feel comfortable. You will only be consistent with a method you feel comfortable with. And the only way you can feel comfortable is to make your own trading decisions. So that's why we don't provide any, one way to enter, exit, and place a stop, okay? Good questions. Someone says, does this work with Thinkorswim? Well, Thinkorswim doesn't allow us to use their actual platform, but what we do is they've allowed us to splice their data. And so we use that. If you're a Thinkorswim user, we can use their data and we'll give you a free NinjaTrader platform to apply. But you know what? I would say, well, why make it more complicated? You can still use Thinkorswim to enter your orders. Just use our platform. We're still giving you the platform for 6 months. And most traders like to continue on with our platform. So this is just something you can still continue using if you want to. After that, you can just renegotiate with Pro Trader Strategies. So it's so much simpler. Trust me, we developed the platform to make it simple, and you'll only find that process that I explained to you today on our platform. Okay, I guess we're all out of questions. Remember, once again, you will all get a link to this recording if you came in late. We have a good crowd here today, or if you weren't able to hear everything. But please watch it at your own leisure, but don't sit on this. This is a great offer, and next week we'll have an entirely different offer. It may be a lot more, and so you may say to yourself, well, gosh, I wanted that strategy 4 and strategy 3A in the 6 months of the platform for $297. And if you contact Pro Trader Strategies, they may say, well, that's already expired. We're on to the $3,000 special today for an entirely different strategy and entirely different format. So if you're interested, if you're truly interested in taking your trading to the next level, watch the video, but then contact Pro Trader Strategies ASAP, and they can reserve the $297 price for you, okay? Okay, as we conclude here, I just want you to take one last look at our disclaimer. And also, I really hope I taught you something today. Remember, I taught you those 2 rules to strategy number 4. If you're not convinced, go and do the research. Go back and look and see at your last 10 or 20 trades. Maybe those 2 things that I taught could have helped you. Maybe you're buying below the 50-period moving average and selling above, and that's why you're having losses. If you see that has really been the case, then strategy 4 and strategy 3A are right for you. You want to really take advantage of this, okay? So as we conclude, I just want to say thank you once again so much for taking time out of your Saturday morning. I wish you the best of luck trading, and I look forward to all of you taking advantage of the strategy 4 and 3A course we have for you. Thank you so much. Have a great day, and I shall see you next time. Bye-bye.